do encourage every individual. I know it's very difficult times, but try to pay your bills on time, and where possible, use online and automatic bill payments to avoid late dues as well. Keep your debt, especially the amount you owe on credit cards, very low. Avoid using your credit card unless you have the funds already there to pay. What I typically do, because I used to forget what I spent on gas, I use my credit card to pay for my gas because it allows me to keep a track record of that, and I find that that's very helpful. But I already have the cash, so I know I will just put it on my credit card as soon as I have the opportunity. So it is, to be honest, credit cards are not all bad. I'm not bashing credit cards totally, but it's the management of the credit card that is going to be very, very important. And I think I mentioned this in my in the last meeting that we had. Also, make sure you have insurance to protect yourselves. There may be medical problems that can come upon you quite suddenly, and they can be pretty destructive. I know we have, in inverted commas, free healthcare, but if you cannot access it quickly enough, then it really isn't as free as you may want to think. Credit cards are a tool that can be used to build your credit rating, but you want to avoid interest and extra expenses. You want to pay your credit card balance off in full. I said this during my last presentation, and one of the attendees saw me subsequently, and he told me he didn't follow anything that I had here, that talking about having 6 months worth of bills saved and a working budget and all this. But he said he did pay off his credit card every month. And I said, well, that's good. You don't have to necessarily do everything here. But if you're doing the critical thing and paying off your balance every month, that will save you from building up a lot of unnecessary charges that will come with having your credit card or using your credit card. The other thing about credit cards is to make sure you know your billing cycle. For example, my cycle is from the 23rd of the previous month, so 23rd of May, to the 22nd of this month, and then I have 15 days in which I then have to pay by the 15th of the following month. So they pretty much give you about 21 days to pay. So it is very important in managing your credit card that you know what your cycle is, and everybody has a slightly different cycle. Know your cycle. The other thing is that you need to be aware of your over limit charges, and it happened to me too. I'm gonna confess, the interest charges could cause you to exceed your limit. So you may have bought an item and you might have gone right up to your limit of maybe $5,000 or whatever, but then charges were applied and you've gone over limit, and the over limit charges can be pretty steep. So be aware of that when you're spending. Do not let your credit card increase your limit. This happened to me as well. They increased your limit without asking you because you were paying really well. Now, please go into the bank and tell them, I do not want this extra limit that you provide me. If I ask you for 5,000, please do not change my limit to 10,000 indiscriminately, because what happens, and this is human nature, we tend to go and use it, and then we put ourselves in a little bit more trouble than we want to be. The other thing that I think some of us are not aware of is that credit card limits are included in evaluating your debt. Even though you may not have an outstanding amount on that credit card, or it may be very small, the loans officer will include the full limit in evaluating your loan worthiness, which in some cases, depending on your financial situation, can exclude you from having access to that loan. So be mindful of that as well. So if, for example, one of the banks, they're offering you a $50,000 limit, please, and you know that that is not a limit that you want, you're not ever going to use it, tell them, no, I don't want it. And use your reward points. I believe that if you can, and if you're willing and prepared to manage your credit card properly, you can benefit. I've benefited from using my reward points. I've been able to travel, booking hotels and airlines. So it can be very worthwhile, but you should have the funds ready to pay at all times. Another topic I wanted to talk about is calculating your cash flow. What is cash flow? It's your money in and your money out. Basically, you have a surplus if you have more money coming in than going out. Simple as that, right? And it's called being in the black, right? Which is what the bookkeepers historically used to use a black pen or black ink to indicate that you were in the black. And on the opposite side, if you're in a deficit, you're spending more money than is coming in. Obviously, you want to be in the surplus as much as possible. So let's learn to budget. And as I said, I'd like to have this as a specific topic, managing and budgeting and so on, because from talking to or counseling so many people over the years, what I've discovered is that anything goes. You ask them, so where is most of your money going? Yeah, I'm paying this, I'm paying that, but they cannot really specify where the funds are going. So it's really important to get control and organize yourselves and also focus only on those items that you need to spend on. It's amazing how many times you get into the line to the cashier and you pick up chocolates and you pick up all the candy and you move along and don't realize how much this is adding to the checkout point at the checkout point. So be mindful that budgeting is very, very important. And if you're managing, part of a very key part of managing your debt is making sure you stick to your budget and actually creating a budget and then sticking to it. So first of all, you should write down where you are right now, everything that you have, what's coming in, what you're spending money on. Next, you need to develop a saving plan that matches your lifestyle and your long-term financial goals. Write down your goals, make changes when your income or your expenses change. And there were some studies that show that as individuals, are compensated more, they just automatically spend more. But that's not what you should be doing. As soon as you get more, you get an increase in salary, you don't spend more. You put it away to achieve the goal that to you put in place or you've set up for yourself. Input the information on your computer to allow for easy adjustments. I recommend a very simple spreadsheet that shows you everything that is coming in and everything that's going out. And take a little picture of all of those slips where you spend money, because sometimes you do forget, but you don't want to forget because you want to really be in control of what's happening with your money. This is a very quick example of a net worth calculation. Shows you the cash on hand. So the first thing you list off is your assets, everything that you own, cash in your account, your checking account, cash that you have in your pocket, cash you have on a savings account, your car costs, your house costs, etc. Notice I have the full cost of the house or full value of the house, but remember there may be a liability on the other side, so you also have to note that. And notice that line there, investment. I want that to be part of your mix of assets over time. Most people I see that have listed their assets, all they have is the house, at least the value of the house, I should say. Sometimes they forget to put the liability portion of it as well on the other side, which is the other list that we're going to come upon. So we have here in this particular case, total assets of 263,000. And then the next list here shows you the liabilities. So the bills that you haven't paid, the credit cards, the car loans, the mortgage for the house. You still have 110,000 on the house. Remember over there it was 175,000 value. So really you have about $65,000 in equity. The line of credit, the family loan, and very critically, I have to say here at this point, please do not try to assume that all those funds that you owe your aunt and your grandmother and your sister and your brother, that those are not part of your liabilities. They are, and you should include them. Be honest with that. Be honest about what you actually owe, because that really makes a huge difference. I remember having a counseling session with a client and they totally, I would say, almost deliberately forgot that they owed almost $10,000 to family members and friends and so on. It is very important, if you're going to be honestly want to tackle the situation that you're in, that you have to include all of your costs, all your liabilities. So in this case, the liabilities total 135,000. So this person had a net worth of about $128,000. So that's how you do it, just to get a rough idea. You can get a lot more granular. You can include the insurance policies and all these other things in there as well. There's significant consequences to default, and I kind of hinted to a number of those earlier. And I think I mentioned this in the last presentation as well, where individuals tend to conveniently forget what they owe. Only kind of acknowledge certain loans, maybe the ones that are where these financial institutions are following up with them and pestering them, and they forget the others until they're forced to think about it. But you need to know what your status is at all times. You need to understand the terms of your loan. You need to understand the repayment process. How and when are you going to make these payments? And you need to manage your borrowing. Don't borrow more than you need. Keep track of your loans online if possible. Maintain your records and stay in touch with your loan service or your loans officer. From my own personal experience, the loans officers are very, very helpful. However, you also have to do your part. And as I said before, they don't have the time to sit and counsel you. And that's what happened while I was involved in counseling, because one of the institutions, they needed someone to sit and work with a number of clients who were constantly returning to them for loans. Every 2 years, they were coming back asking for a loan. Contact all your creditors. This is how to pay off your debt. Contact all your creditors and ask them, you know, if they can, in some cases, reduce the interest rate on some of the loans that you have. As I said, list all the debts on a spreadsheet. Listing the credit cards with the highest interest rate first. Pay the maximum amount, and then once that card is paid off, you start working on paying off the card with the next highest. I'm going to go through these others, and I think I talked about this, but compiling all your debt into one single document, developing a budget, eliminating unnecessary spending, saving up a cash emergency fund, applying all the surplus income to debt. Live below your means. I can't stress that enough. Live below your means. Go always borrow less than you need. You really think you need. Increase your income where that is possible. I know that's a little difficult in this environment. Continue saving and investing. Now, there are a couple of methods that you can use, and I'm going to very quickly go through these, Marjorie. Debt avalanche is a type of accelerated debt repayment where you list all the debts with the highest interest rates first, and then you apply the minimum rate to all of your loans, and then you pay the balance as much as possible, the extra payments to the highest interest rate loan that you have or credit card. The snowball method is quite a little bit different, where you list your debts from the smallest down to the lowest, and then regardless of the interest rate, in this case, the interest rate doesn't matter. You make the minimum payments on all the debts except the smallest one, and then you pay as much as possible on your smallest debt. And you repeat until each debt is paid off in full. What this does is gives you a lot of encouragement because the debts start to disappear, and it happens a lot faster than with the avalanche method. So this is just a quick example here that I'll share with you. This person has a budget of about $650 per month. That person has two credit cards. The first one is 4,200 at a 22.24% annual percentage rate. There's a second credit card with $1,300, 15.74%. There's a car loan of $10,750 and a student loan of $6,400. And you can see the minimum payments associated with each one of those loans. Under the avalanche method, it will take individual about 3.4 years to pay off the debt, and they will repay about $3,668 in interest. It does happen about 6 months earlier than a little bit earlier than using the snowball method, and you do pay a little bit more under the snowball method. But again, this all depends on who you are and what motivates you. If you are motivated by seeing the smaller debts disappear, then the snowball method will be for you. But if you are like me and want to see the highest interest rates debt go, then you would like the avalanche. One is better in that in the case of the snowball, you will pay a little bit more. Another option though is debt consolidation. But the danger about this debt consolidation loan is that you have to be very disciplined. You have to stay away. You have to be extremely strict with yourself. So in the case of, in the same scenario that we had earlier, you could go and get a debt consolidation loan of about 8%, and you can pay that towards the loan every month. Under this method, you will finish paying it about a month earlier than either the previous two methods, and you would pay about $400 to $600 less in interest. The danger about consolidation loans, as I said before, is that you have to change your behaviors, because empirical evidence has shown that as within another year or so, that same individual is back to consolidating another debt, because one, they don't throw away the credit cards, or they continue with the same lifestyle that they had before that got them into trouble in the first place. So to stay out of debt, develop a budget and stick with it. Stop spending, save more, set payment reminders for your bills, stop going out to eat, plan your grocery trips, get rid of the gym membership and start walking. There were several others that I can add here, but I just thought that these were some key methods, I should say, are ways to stop, to stay out of debt.
We have a question here. Would the cash value on an endowment plan or enhanced life insurance plan be an asset?
Yes, it would be considered an asset, of course, because those are funds that have accumulated in your insurance policy for that period. Not that you want to go and access it, but you should really just include it on the asset side. Correct.
We have another one asking you for your feelings about a credit card that does not have a yearly fee, but interest is calculated daily. Is that useful for building credit history?
I am not sure the link between a higher interest rate card and credit history. I'm not sure where that question is going. But what I will say is that you want to pay as low an interest rate as possible on your credit cards. So if this interest is being calculated daily, then you need to probably have a discussion on a card that's not compounding as often. Because at the end of the day, your goal is to pay as low a rate as possible, and the higher and the faster that rate is compounded, the higher the rate that you will pay for that card. There's always a trade-off. If the bank or the financial institution isn't charging you a fee, then obviously they have to make their money somehow. And that to me sounds like a very expensive card. I'd rather pay the fee.
Okay. And then we have one here. Is it wise to use the Amazon credit card?
I mean, this is Prime?
The response is yes, Prime.
Prime. Yeah, of course. I mean, you can save quite a bit using Prime. However, you have to be mindful of your limits and what you want to really spend and want to service. Because if you are using the Prime indiscriminately because it gives you lots of those little benefits, they're there, but you don't have to use them if you don't need to use them, right? Only, as I said before, and what I stress is the whole question of good debt versus bad debt. If you are purchasing something through Prime in order to maximize or to generate more business, or that's something that's going to generate some type of return, for sure. But otherwise, avoid adding to your indebtedness.
Okay. And we have someone asking, can you please expound a bit on why a car loan is considered bad debt?
I kind of wavered about putting it under bad debt because I know sometimes a car is absolutely necessary. However, you have to be honest about your financial situation. And if you truly cannot buy gas, there are people who drive into the gas station and buy $10 in gas every day. So if you are finding yourself in that type of situation and you can't take the car to the dealer to have it serviced, or someone to keep it serviced, and you're breaking down every 2 weeks or something like that, or you can't pay the insurance, these are real signs that you really can't afford a car. So that's why I put it under that category. However, if you can afford all of those things comfortably, it could be a good debt, right? Sorry to compare this to a child, but I mean, a house and a car, they keep calling for things. You never stop servicing them. To be honest with you,
Okay, another one here is why are banks, I don't know that you can answer this, this might be a little controversial, but why are banks targeting customers with additional cards and loans, yet not offering a decent interest rate on savings?
well, it's your responsibility to refuse them if you don't want them. I get it all the time. These oh $32,000. I can get it with no collateral. I don't have to do anything but just come and collect this $32,000. And I take it very nicely. I take them very nicely and put them in the garbage. Because you have to, that's why I talk about setting up a plan, setting your plan and knowing what you want. If you don't need that 32,000 or you cannot identify a need for that $32,000, then you just say no. Their marketing team has to do their job. They're there to increase loan, access to loans for customers and to give customers opportunity to do more. But it's your responsibility to stay away from debt if you can't manage it.
Should hire purchase stores who offer loans and credit to customers be considered financial institutions instead of retail stores? And should they be regulated by the central bank?
Excellent question. That's a difficult one. The situation that exists is that they are allowed to do it. I mean, it's a model that has been followed in North America for a very long time, and they have the opportunity to do it. I see nothing wrong with it per se, but again, we got to recognize where where the high debt issues are, and higher purchase and borrowing from retail stores is going to be expensive debt. I have discovered that persons who are pretty desperate usually borrow from these types of institutions, the retail stores and the loan sharks, as I refer to them. But the, those loans are always going to be expensive. I mean, it is amazing. Some of those loans are as high as 40% here in Barbados, as high. I'm not talking about the retail stores necessarily, but some of these rates are really, really high. And it is not fully explained, in my opinion, in some cases, but it is your responsibility to ask the questions. I would say that as far as the regulatory environment is concerned, they are allowed to do it. So it's really you as a customer that needs to know whether you can afford to do it and just walk away.
As a follow up, it has just occurred to me to ask this. Is there a kind of an average rate that people should say above this, it's too high? If it's that, it's okay?
Yeah, well, that's a very difficult question to answer because, as I said, the credit rating of the individual comes into play. I would say though that in the current mortgage market, I mean, interest rates are as low as 3%. So if you are in a situation where you're being offered a 6 or 7% rate, then I think you should really ask some questions. It could be a reflection on you being considered a credit risk, or that bank is really trying to, not bank, or financial institution is really trying to, very conservative, let me say, gouge. Yeah, I would say that there's no real standard rate. Like, for instance, I was doing some research on renewable energy loans, and those can vary from 5% to all the way up to 10.5%, depending on the institution that you are applying to. So there's a range of prices, but that is, again, you need to shop around and check around first before you enter any type of debt arrangement.
All right, the next question. What would you say is the best way to organize your personal budget?
Yeah, I would say the best way is to really look at what your needs are. Separate the wants from your needs. So the things that you need to do, you need to pay your rent or mortgage, you need to eat. If you're saying I'm spending $500 a month on groceries, but yet you're eating out every day, you're buying lunch from a restaurant every day, you really are not considering what that cost is. So that could be another $500 pretty easily. I do advise you to track at least 1 month of expenses to get an idea of what you're really spending your money on. You'll be surprised at how much money you spend on chewing gum and chocolates and snacks that you're trying to stay away from because they can contribute, apart from having unhealthy debt issues, you also have unhealthy diet, which will contribute to hypertension and diabetes and all these other issues that are prevalent in this country. Be honest with yourself, track your expenses for at least a month, see where your money is really going, and then really only a portion. And I mean, even go cash, just using cash for a period of time, so that if you see things that you want, you will say, well, nope, I don't have enough cash, I can't buy it. And that has worked for me. If I only have $5 in my pocket and I see something that costs $10, I said, no, I have to buy it next time. And my credit card is not with me. So that helps to keep you in check as well. But I think very importantly is to be very honest about your spending, and you need to cut it.